I got Scott Bauer, CEO of Prosper Trading Academy, in studio. Mr. Bauer,
there.
Always a pleasure. Good to see you.
It is good to see you as well. Great to be here.
I appreciate that.
Yeah.
All right, so it's a fun day. We got a lot of stuff going on. Let's start with ADBE before we go
what do we have?
Yeah, but this is kind of a sleeper event this afternoon because,
no doubt,
given the pivotal AI role in keeping the market going here,
Agreed.
The market's got something else besides the Fed to hang its hat on. That's why I think these numbers are going to be really important.
It is, and these numbers will probably affect a lot of other stocks in the sector.
I think so too.
In some of the other big guys, maybe across the Mag 7. So we could see some big movement because of that.
ADBE is kind of like, if you stretch the 7 to the 20-ish, as far as like, Kevin's telling us about the Creative Suite,
it's
the
in
Cloud
that next
Suite.
tier.
Man, $300 billion.
Yeah.
Small potatoes by any means.
No.
And given that it's supposed to be kind of a low-hanging fruit for AI, they're taking it, they're putting it on top of what they already got, and it makes sense for all the users. So
it's also one of those stocks that retail investors love to watch and love to trade it as well. So you could see a lot of activity in that.
What do you think right now in terms of, because we got a trade we're going to get into specifically. Let's do that first, and we'll come back and connect it to the other stuff. What do you see in the options?
Yeah, we're pricing in, a move that puts you back towards the 50-day moving average to the downside, blows out numbers on the upside. So I'm looking at something where I'm looking for fairly range-bound moves, similar to what we did in GME, in Iron Condor last week. So what I'm doing, Oliver, is next week's options, and I'm not using tomorrow's options because I don't like the one and done, and if the move happens, I don't have any chance to adjust.
0 day.
Exactly. So I'm using next week's options. I'm selling a 585, 575 put spread. I'm selling a 665, 675 call spread. Got a lot of room on both sides. I can do that. I can collect about $4 or so to do that. That gives me a break even next Friday at 581 on the downside and 669 on the upside. Pretty wide range there. I would typically like a little bit more premium to collect there. I usually like about a 1-to-1 reward to risk, and this is a $10 wide spread. So if I collect 4, I'm risking 6. But I like the width of this, and I like the room there. And listen, if it's a blowout one way or the other, I've got some time to try and adjust this, work around it because they're next week's options. B, I'm always stopped out. That's why I trade spreads on both sides.
So 4 to 6 is your win ratio, basically.
Yes.
So it's not a perfectly even.
Right. I like it usually around 1-to-1. This is, 0.67.
The option's not volatile enough? There's not enough
exactly. There's just not enough premium built in as much as I would like. A lot of people will look at this and say,
but too much to want to outright own premium.
Correct. I definitely don't want to own it. Definitely don't want to own it. But a lot of people look at this and say 4, make 4, risk 6. And they'll look at that and say, oh, I like those odds. To me, it's not usually quite enough, but I'm going to do it on this trade.
It's still pretty good. I mean, and the idea too is that it hasn't been a giant earnings mover. You had one pretty big pop that if you put this trade on in the June report would have been stressed a little bit, but this trade certainly would have worked last time. It's been, it's gone through phases where it went sideways, consolidated, and then it made a move, and then now it's kind of been, to some degree, actually, despite a fresh 52-week high yesterday, we slipped back down, and we have seen this $620 level multiple instances in the last 2 weeks.
Exactly, and there's a lot of support also on the downside where that 50-day moving average is right around 570 to 575 area. The upside, it does concern me a little bit for this trade, only because when you see a stock butt up against either that resistance area multiple times or a support level multiple times, it usually blows through, right? Whether it's the 3rd time, 4th time, that maybe could happen on good guidance here. We'll see what happens. I like the odds, I like the credit.
You're more worried that if the trade went wrong, it would be because it rallied too much.
Because it went to the upside. I like the support down on the bottom.
I do feel like that's the stronger end of the of the condor, right?
There's no question. There's no question about it, and we'll see what happens. We know that premium is going to collapse tomorrow, regardless of the move. It's just really how big is that move?
Yeah, for Adobe, which is, I mean, because again, there haven't been a lot of software companies this close to the highs.
Nope.
They're really, really strong. If they were to break that moving average, they would probably have to drop the ball pretty hard on this.
I would agree with that. You know, and a lot of people will look to what happened with Broadcom, with AVGO.
That's true, though.
You know, and say,
that was a big pop.
We had the little bit of a sell-off right after the earnings news, and then look
Oracle
at that.
got wrecked too. So you're actually, now that I think about it, it's, you know, you're kind of wandering into camp here, but there's been some pretty big moves.
Yeah. So
for a couple of these companies.
But I'm playing the expected move, right? The market's pricing at about a $40 move either way.
Yeah.
So that's what I'm looking at here, and you know, we'll play the odds.
All right, I like the trade. The final thought: AI driving the market, Fed cuts driving the market. What percent do you assign to each? Is it like 70 cuts, 30 AI, 50-50?
80-20 Fed.
All right.
80-20 Fed. You know, the AI is going to be the AI, whether, you know, the Fed cuts in March or May or June, whatever it is. I think AI is going to play out, you know, the way it's going to play out. It concerns me a little bit that the market maybe is a little bit ahead of what the Fed may be doing. I think Powell is sitting in the catbird seat on this one, and given
he's got a lot of optionality this time.
He's got a lot of optionality. Given the recent data here, he can really just sit back and say, you know, we're getting there, but the new mantra, I think the new mantra from we had transitory and then we had higher for longer, and I think the new one's gonna be, we're just not there yet.
Okay, nice, I like that. All right, thanks, a little hot macro take in there, 80-20. I guess there should be another slice for like growth, but you know,
there we go.
AI and FOMC is what we like to talk about. Thanks, Scott Bauer, for the trade. All right.